Hello and welcome, and it's time for another video talking about trading methods regarding buying low, selling high. This one's a very interesting one where every coin will always be generally worth the same. And what we're going to do in this is have so many different coins. Maybe you put whatever you have, say you have however many Bitcoins you have, or how many coins you say you want 20, then you put 5% of your portfolio in every single coin. And then from there, now you're trading every single day or every single week, however you want to do it. I did test on a daily basis. But step one is take the portfolio value you have in Bitcoin and divide it by the sum of coins. And most trading sites will give you this information, stating your Bitcoin value is blah, blah, blah. So you take that number, you divide it by your total coins. That gives you the average of what each coin is worth. And then you find the difference of individual coins. So say, for example, you have a 0.2 average per coin. But one of the coins is worth 0.225. That means it's doing well. So you're going to sell 0.025 worth, which would be step 3. And then same thing if it's going lower. It's going to work out that you're going to be buying and selling every single time, and you're pretty much playing everything in your portfolio against everything, and naturally buying low, selling high. Okay then, so I thought this for most of the day. Well, for a little while, but I did some data tests. I only did a few coins. I did 9. So let me bring a spreadsheet up to show you the results of how this has manifested since the start of last year. And I'm only using 9 different coins: Art Bytes, Black Coin, Cloak, Crown Coin, Dash, Gigabyte, Doggy, Ethereum, Feather Coin. I could put a whole bunch more in, but it really defeats the purpose. Well, I mean, you get more data. In fact, I had to do this in 2 tests. I did the first spreadsheet, really complicated, and the data came out incorrect. But some of the data I downloaded was, I think, off. But anyway, so what we have here is the date on column A, the code that I show, and the number below is its price that it closed at on that day. So now column L is ownership. So starting off on the first one, what I did was I stated, okay, let's say you start with 0.9 Bitcoin, or you want to put 0.1 on each one. So 0.1 divided by the price is what I did in this example. Okay, so after that, okay, well, so I did that for each one. I'll get to how these ones got changed after I go through the rest of the columns again. The value. So in this one, what you're doing is, this is a very simple calculation. How many you own, multiply its price. So I would take the price this day, multiply it. So it changed the next day. So Art Byte didn't change, so it stayed at 0.1, but Black Coin went down to 0.095, so it actually lost value that day. Crown Coin had a good up day, going from 0.1 to 0.13. Okay, so that's got all of the what the value of each one is. And now I got the average. I took the average of each one. And now I know that. So the next column is required ownership. This is very easy to calculate. For I already know that I need this per coin. So I'll take that number and divide it by its price. And there we have it. So I did that for every single coin. And then we calculate the difference. So this one here, negative 1135, positive 156. This is how many you would have to buy and sell at the end of each period. And in some cases, maybe you can't even pay the rake on this one because, quite frankly, you couldn't here. But at those days, you don't have to do anything anyway for those coins anyway. If the purchase is that low, you're already at where you have to be. Okay, so this here, transaction cost, I need to calculate rake because if you're doing this in real life and you're going to be paying 0.25% every single time you make a trade, I need to know how much the transaction would cost for each situation. And there we have the rake. So the original day you would have bought 0.9, paid this rake. So this shows how much would have been paid per day. So therefore, it's very easy within the spreadsheet to then bring over what the new ownership number is here. So whatever the number is here, well, that's what we'd have. So I'm going to bring that over here. So that's how these get calculated. And everything else is just copied and pasted the rest of the way. We can see that everything got off to a pretty decent start in the first few days, bringing your portfolio up from an average of 0.1 to 0.123 just a few weeks in. But the results are magnificent when we take a look at them, because I am comparing them to just buying and selling or buying and holding every single one. Because what I did on here is the hodler stats. This is taking the amount of shares or coins that you would have bought on the original state, which is this many for each case, and then just holding them. And that's it. So therefore, the value of each of them comes in here. And the mathematical numbers are very simple. Take the sum of this number, subtract the starting value, which is 0.9, and then a little bit of rate that was paid. Because you have to pay it once, and actually you're going to have to sell it at some point. But trade value. This one here is taking the sum of the value that everything is, which is calculated, of course, right in here. So we got the overall value. I got to subtract all of the rate that I paid. So that's what this does here. So we're going to follow this through. This is the total net profits simply by holding those coins that I've shown and by doing everything that I state. Every single day in this case, buying and selling to where you need to be. So let's move this down, and again, the right hand side is the trading. So just in this state here, 12% are profiting of 0.12, profiting 0.59. At this stage here, over a Bitcoin, this is where you've now doubled your portfolio or done better than such, yet holding, you've done very well with 30% gain. Not as well though. And then we can see these numbers again, 4.7 versus 2.2. 10 versus 4. 21 versus 7. 61 over 14. I mean, a lot of wild volatile moves, as you can see within these swings on your portfolio. Seeing it go from like 80 in here down to 50. Well, the other one went from 18 down to 9. And as we see further, now it's 41 divided by 7. And then 7 in comparison. And here it is 7 again, 47 on this side. And this is where it gets really big here. 90, what date are we at? We're talking now December 2017. This is when the cryptos were going wild, all these altcoins. And in this case, the portfolio is just surging to the upside. As I stated from the original start, that this naturally is going to sell coins that are overvalued, thus selling high, and buy coins that are undervalued, thus buying low. And as this continues further, again, this was at 160, got up to 230. Today it's fallen down to 155. It was even at 120. Markets have been doing a little bit better lately, but you would have 6.73 times better just buying and holding these coins. Whereas every single day, say at 7 o'clock, doesn't matter what time, you go in, you put the calculations in. A spreadsheet can do it pretty easy for you. Pen, paper, and a calculator, it could do the trick as well. And these would be some of the net results in doing such. And again, I just made this spreadsheet, but wow, I mean, this is just magnificent how greater of results that could be done. If you want to verify this information, then I've given you an outline to how this can be done. There's also alternate ways to do such as well, to verify things in different formulas, different methods. I got my data from cryptocompare.com. But when you look at the markets having those massive moves where you see situations where one coin goes up like over, say, an 8-day period, 10-day period, maybe triple, and yet other ones don't go up and it goes up later, it's going to just capitalize on the situation. Because if, say, well, back when, say, Litecoin was going up and everything else wasn't going up as much, you'd be selling all your, not all your Litecoin, but you'd be selling Litecoin and then buying the others. And then when Litecoin went down from like, well, Litecoin was at like 0.024, 0.022. Now it's 0.016 change. So as it was going down, you would have been naturally buying that as well. So just a different idea, especially for people who want to try to use a method that's really easy to use. It just takes a lot of commitment and staying in within the games, because you're going to have down spells, as I've shown, where the value of your cryptos do go down. But these type of trading mechanisms is going to really help outperform markets on the long-term time frame, as we've seen in a monstrous level using this example. Thank you for tuning in to this video, and have yourself a great day. Bye-bye.